Let's welcome in our next guest on the show. Sampath Reddy of Bajaj Allianz Life Insurance is with us. Sampath, that's the question to you. As you're, you look to deploy more cash, are you chasing mid caps or sticking to safe, tried, tested large caps?
At this point of time, we are still liking the large cap because the valuations are a lot more attractive in the large cap segment. That's what we've been liking. But mid caps also selectively, a few auto ancillaries and things like that. We've been picking up a few mid cap stocks also. But predominantly, the value lies more at this point of time in the large cap segment. Even the earnings growth is also, given that earnings growth is also going to come back from the FY19 onwards. We'll be better off, I think, sticking to the large cap at this point of time.
By the way, Anuj, I just want to point out, people are not only drinking beer, there are people who drink milk as well. So Parag milk is a stock on the move. Days high on that one as well.
Yeah, all kind of beverages have done well, of course, over the last many months now. Sampath, hi, good afternoon. So you said you will prefer large caps. Any sectoral preferences here?
We've been liking the private financial, especially the retail banks and retail lenders. That's what we've been liking. They continues to do well, given that their market share are relatively small in the overall loan book. They continue to grow even if the credit growth is relatively small, and the asset quality is really the best in the retail segment. That's what we've been liking, the retail private financials. Apart from that, we've also been liking the metal sector also for quite some time. Mainly the aluminum as well as steel sector, because these two places India has got a competitive advantage because of the natural resource advantage. In addition to that, the recent sanctions on some of the Russian aluminum producers have also led to the overall aluminum price increase globally. So that will also adding to the further bullishness in the commodity sector. If you look at both of these segments, both steel as well as aluminum, all these last 4 or 5 years, if you look at it, incremental capacity additions have been very, very muted. And if at all, we've been only hearing about the last 1.5 years, only the production cutbacks and scale backs. So all of that has led to overall significant reduction in the global inventories levels. I think the commodities are very well positioned. These two segments, both aluminum and steel, India has got a good competitive advantage. We've been liking this space better for quite some time. In addition to that, we've also been liking IT services sector. Whole of last year, even though the dollar revenue growth was pretty good, at the bottom line level, there was hardly any growth in the IT services companies. That is largely because of the rupee was appreciating a lot in the whole of last year. With the crude going up and with the kind of where rupee is today, we are looking at rupee beginning to weaken from now onwards. Most of the appreciation for the rupee is largely behind. So now current year onwards, we will also see the earnings growth in the IT services companies in line with that of dollar revenue growth. So, and also the valuations are very, very attractive. Big companies like Infosys, TCS, HCL Tech, all of them trade around 16, 17 kind of a PE multiple with a huge free cash generation. So we've been liking that segment also quite a bit.
Many thanks for joining us on Closing Bell today.